All right, the inflation numbers came out today, and month over month for March is 0.1%, bringing the annualized rate down to 5%. So this is a really good trend. This is looking a lot better than things were a year ago at this time. Here's kind of the new release. I did one yesterday. If you watch that video, you can go back and see it on the channel. But basically, this is the chart, the bar graphs that we're looking at. This is March of last year at 1%. This is where we're at now at 0.1. So this is really the 12 months going forward. And so we have a few more of these big ones to go before we really start to see the annual rate that's now 5% or 5.1%. Go down to that 2% range that they want. But this 9-month section that we've got now, if you add them all up, divide by those 9 months, you get 0.267 is kind of the month trend for the last 9 months, which means after we kind of tick these off, if we continue on this same trend, we would be at 3.2%. Still a little bit higher than what they want. So there is actually a 71% chance, according to the experts, that they're going to hike another 25 basis points in May in order to keep putting the pressure on the market to slow the economy down just enough to get the inflation down to that 2% mark. Once we kind of get forward, these become the bigger numbers, that we need to make go away, if you will, which they won't until we actually come up, a year from October or a year from September before we can register a new number that knocks that down. So the only real way that we get it down to 2% earlier than that is to have negative numbers. So even though this 0.1 is a low number, it still means that the economy, or that the prices in the economy, grew by 0.1% from March over February. So we're still kind of heading in an upward trend. It's just a very slow upward trend as opposed to these bigger ones that we were going a year ago. So looking good in that direction. We can kind of take a look at some of the spots. I won't go through all of this stuff with you, but I did want to kind of see where there were some outliers in the individual sectors of the market. Here's airline fares went up 4%, you can see. And so that's causing inflation. And then look at, hallelujah, eggs down 10%. So I think you're probably seeing that in the supermarket the way I am. Egg prices have gone down. Here's where it went up 8.5 and now it's down 10.9. So kind of a neat little thing. Let's also take a look at what mortgage rates did. This is a little bit of a tick down to 6.4. The blue line here is the 30-year fix. And with this news, it sent kind of bond markets. Actually, bond markets were a little bit weird today. They dropped on the CPI data, and then they went back up once the meeting minutes were released, and then they kind of stabilized. So we're at 6.42. If you're shopping for a mortgage to refinance or purchase right now, if you've got good credit and a down payment, you'll probably get lower than that. I think you can probably get about 6%, maybe even a little bit less if you shop around. This is just the average going on right now. And then we can kind of look, I'll highlight that the 10-year, what it kind of did today. You can see that it just was kind of all over the place today based on when news came out and all these spikes and all that kind of stuff, seesawing back and forth. And it's kind of averaged out at 3.4. And this is kind of the full week, 5 days. So it's really kind of flat for the week. So anyways, that's it for this one. Just kind of a short, quick one to go over numbers, and we're headed in the right direction. We'll see, if we can get out of this with a soft landing. There's some rumblings going on about maybe some potential lending issues with commercial mortgages. I'll do a whole video on that, but kind of to summarize it quickly, when people aren't renewing their leases for office space, then the value of that building goes down, because the value of a building is based on your net operating income. So with the pandemic and the Zoom calls and the work from home and remote and stuff, people aren't renewing as much office space, or they're not renewing it at all. And so the income in each office building is being reduced. When that reduces the value of that property, and you've got short-term loans on it that have to renew about every 5 to 7 years. Commercial loans are not like 30-year mortgages. They kind of come due with balloon payments, like on the 5 and 7 year cycle. So think 5 years ago, you're like 2018 with a strong economy. The value of the property's up here. You get a loan at say like 70% of the value, and now it's 5 years from now, your value has come down and you've got to refinance this money, and you don't have enough loan to value to do that. So there's some rumblings that we might be in some trouble with some defaults or things like that, where it's going to be tough to lend on some of these commercial buildings. So we'll see how that plays out. But that's all I got for now. If you want more content like this, please like and subscribe. I'm going to try and put videos out on a daily basis. I'll try and tie it into real estate because that's what I do. But I think the overall economy is important to see how it affects real estate prices, mortgage rates, and just kind of the health of the housing market in general. Thanks a lot for watching. Bye.